The month has ended and the Wall Street was bullish in the month of January 2025. S&P 500, Nasdaq 100 and Dow Jones Industrial Average Index, all the three major indices ended in a bullish note in January 2025. But if you look at the week on week market scenario, S&P 500 and Nasdaq 100 ended on a lower level. However, Dow Jones Industrial Average Index outperformed the S&P 500 and Nasdaq 100 and was extremely bullish over the past week. Now, if you look at fear and greed index, it reads currently at 46. So it is in a neutral territory. And 1 week ago also it was in a neutral territory. If you look at the put call ratio, 5-day average stands at 0.66 with respect to S&P 500 option data. So this particular index is indicating that the market is in the greed zone. So in this video, we'll undertake the comprehensive technical analysis adopting the top-down approach for S&P 500 and Nasdaq 100 to determine the support and resistance level, understand the price action, and what could be the possibility in the upcoming week. D K Sinha here. Don't forget to like this video, subscribe the channel, hit the notification bell for updates. Let's straight away go to the price chart to undertake technical analysis. This is the monthly price chart of S&P 500 index. The index closed at 6040.53 and this is how it was bullish by 2.7% on month basis. If you look at the price actions since 2009, there is a typical price action in S&P 500. Whenever correction takes place, it takes supports at EME 55. Even during the bear market of 2020, it took support at EMA 55, and then again in the bear market of 2022, it took support at EMA 55. So we can see the very typical price action that EMA 55 even in the bear market or a major correction acts as a dynamic support. Where the currently EMA 55 reads, it reads at 4494, we can round it off to 4500. So even if we presume that the bear market will start, then even 4500 becomes a very strong support. It will be higher because ultimately bear market is not going to start very soon as per the cyclic phenomenon of the market. So by that time, this EMA 55, which is already inclining up, will rise above and the level of the bear market would be much higher. Now, if you look at the price action, what has happened in the prior month, that is December 2024, there was a formation of a bearish candle, and in the January, almost the bearish candle has been engulfed by the candlestick pattern of January 2025. So, if I draw a rising price channel, can we see this typical rising price channel? Price has taken support here, price has taken support here, multiple support can be seen in the lower fiber, and one typical price action can be seen. Then whenever the price crosses up, the crosses up the middle fiber of this rising price channel, at it has done it here, it touches almost to the upper fiber here, almost upper fiber. What does it mean? In the next cycle, there is a great possibility that S&P 500 may go and move like this to touch the upper fiber. So there is still a cushion for S&P 500 to go up. Now, if you see the well-defined impulsive wave, this is the last impulsive wave and this was the bear market. If you take the reference of this particular pattern, I am drawing the bullish flag. This is the bullish flag I am drawing. So if we project the target on the basis of this pattern, where could be the potential target? Let us calculate this and project from this level. So there might be some loss of momentum at around 6,300 328 level, but the overall structure is quite bullish. But if we look at the price action on the basis of this continuation chart pattern, which is a cup and handle kind of chart pattern, and project the target on the basis of this cup and handle chart pattern, where is the potential target? The next potential target is coming at around 6,400 level. So these are the important target levels, little in intermediate term in S&P 500 index. Now let us go to the weekly price chart. So in the last week, market was bearish by 1%. It's on a week basis. But what in the process the market is doing? Whenever correction is taking place, EMA 21 in weekly time frame is acting as a dynamic support. Once again, the price bounced back from here. So there is a formation of a continuation chart pattern. Let me draw and explain you. This is the formation of a bullish flag. So if I project the target on the basis of this bullish flag kind of pattern, then the next possible target comes at 6,460. So these are the different kind of methods we have adopted to arrive at the potential target. So we can safely say the market is likely to go in a range of 6,400 to 6,500 level based on the various kind of chart patterns that we have discussed. Now let us go to the daily price chart to understand the recent price action. What we can see in the last week, we have explained multiple gaps. These multiple gaps indicates nothing but the runaway gaps, and there has to be an exhaustion once multiple gaps get formed in the market. So considering the overall price action, I'll mark the strong support level. I'm marking here. Can you see here? Price has taken support here, taken support here, taken support here, and this gap edges. So 5,850 is a good and strong support in S&P 500. There could be a intermittent support as well. I'm marking this very important level, which is an intermittent support at around 5,950, because there is a formation of a gap, and this was the gap down candle which market gap down, and this was the gap down candle of which date? It was on 27th of January, probably on that date when we had a news for deep seek new AI model from China startup. And that day market gap down, and I had made an intermediate video on the channel that there is no weakness in the market. This was a temporary jerk in the market because of that news of DeepSeek. However, the last trading session of the last week, we have seen a price rejection on a formation of bearish candlestick pattern, but the price is trading quite in proximity of uh, EMA 21. So, in fact, the zone between EMA 21 and EMA 55 is likely to act as a good support in the forthcoming week. And EMA 55 currently reads at 5,956. That is what we have arrived at based on the price action, that 5,950 is likely to act as a good support in the forthcoming week, with probably a support at EMA 21. I am drawing a horizontal line. Can you see? Price rejection, and there was a gap down opening, and then the price recovered. So 5,950 to 6,000 level is a likely support, with a major support at 5,850, where there is an existence of a gap, because the markets usually do not like gaps and it gets filled. Like there was a gap which was prevailing for a very long time. Ultimately it got filled over here. So these are the important levels in S&P 500 for the upcoming week. Let us straight away go to the price chart of Nasdaq 100 to undertake the technical analysis. This is the price chart of Nasdaq 100 index in monthly time frame. Index closed at 21,478, and hence it was bullish by 2.22% on month basis in the month of January 2025. Now, what we can see here too, we can have a price action which is quite similar to S&P 500. That this was a support level in 2022 bear market. Price took support at EMA 55, Once again, price took support at EMA 55. Here too, it came in a zone of EMA 21 and EMA 55, EMA 21 and EMA 55. So we can see if a deeper correction takes place, EMA 55 becomes a important support area. Where the currently EMA 55 reads, it reads at around 15,008 level, but it is rising. The slope is upward moving. So price EMA 21 will go up. So even in the bear market, even if the bear market comes after a year, 1.5 year, then probably EMA 55 will be at much higher level. Here too we can see the long term perspective. There is a well defined impulsive wave, corrective wave. So there was a breakout of a continuation chart pattern, what we call it as a bullish flag. And if you see this kind of thing, this is a continuation chart pattern which is called cup and handle kind of chart pattern. So if we calculate the target on the basis of cup and handle kind of chart pattern, the next potential target comes at around 23,200. Okay, on the basis of cup and handle pattern. We can arrive the target on the basis of bullish flag. For that, let me draw the bullish flag first. So I am drawing the bullish flag. This is the bullish flag I am drawing and covering all the candle during the consolidation period. And this is the well defined impulsive wave. So if we take the reference of the impulsive wave and project the target on the basis of this breakout of a bullish flag, then probably the next potential target comes at 25,000, which is a 61.8% expansion level. So this is a pretty ambitious target because currently Nasdaq 100 is trading at 21,478. Now let us go to the weekly price chart. What we can see in the weekly price chart, the Nasdaq 100 was bearish by 1.36% on a week on week basis. However, the price is taking support at EMA 21. Price is taking support on EMA 21. If you look at the candlestick pattern of week starting on 13th of January, there is a bullish piercing kind of candlestick pattern, and in the last week market gapped down, but there was no follow through on downside and the market recovered. So if I draw a horizontal line, this is the horizontal line. Why this is important? Because this was a formation of a cup and handle pattern, and this becomes the neckline. So neckline currently reads at around 20,300, which becomes the good support, immediate support in Nasdaq 100. So if I calculate the target on the basis of cup and handle kind of chart pattern, where the target comes, let me project the target measuring the depth of the cup and handle pattern. So what it has done, it has achieved the first target of 61.8% expansion level, and then this correction and consolidation started. So once the trend resumption takes place, next potential target could be to 23,350. So overall structure of the market is still bullish. Let us go and to the daily price chart to understand the recent price action. What we can see here, here too, we can see the gap number one, gap number two, and again the exhaustion. So this is a typical characteristics. So what we can see over here, in the last trading session of the last week, market gapped up, but it could not sustain. And this gap, which was created, has acted as a supply area. So can we draw a upcoming bullish flag pattern? So I am drawing a bullish flag pattern. Watch it carefully. This is the bullish flag pattern. Once this pattern gives a breakout on upside, the upside momentum will develop in this particular index. So if I calculate on the basis of last impulsive wave and presuming that the breakout will take place somewhere here, the next potential target based on this upcoming continuation chart pattern, that is bullish flag, comes at around 22,427. So overall structure is bullish. Where are the support? Can we see the formation of a gap down candle on 27th of January with a formation of an inverted hammer? So inverted hammer is quite in proximity of EMA 55. So immediate support for the forthcoming week could be to 21,100 to 21,155. This is the immediate support area. This was the gap over here, and this was the inverted hammer. The range of inverted hammer will act as a support. So, what is the conclusion of this week's analysis of the US stock market? Although S&P 500 and Nasdaq 100 were marginally bearish in the last week, but there is no change in the expectation of the market. The overall trend, uptrend, remains intact in the market, and the market in future is likely to make higher highs and higher lows kind of market structure. How did you like the analysis? I'll be waiting for your comments in the comment section of this video. Thank you very much for watching. Looking forward to meet you very, very soon.